Keeping an eye on the business world, it's always fascinating to see those big shifts, the kind that really shake things up. And right now, there's one that's simply mind-boggling. The AI infrastructure market is projected to explode
Yeah, you're not kidding.
from almost $46 billion this year to over $1.2 trillion by 2037. I mean, that's the kind of growth that makes you sit up and take notice.
It is. And that's not just a trend. That's like a complete reshaping of how technology works
Yeah.
and the resources needed to power it.
Exactly, which is why a company like Nebius Group N.V, they trade on NASDAQ Q. Based in Europe, they become so interesting. They're setting up shop right in the heart of this potentially huge opportunity.
Yeah, they are.
So for this deep dive, we're going to really dig into Nebius Group. What we want to do today is to give you a clear, insightful understanding of this company. We look at a lot of different sources. There are research reports, news articles, financial documents, what the analysts are saying. We're going to explore their business model, check out their leadership team, see how their financials are doing, understand the market sentiment around them, identify their key stakeholders, and really pinpoint the risks involved.
Absolutely.
So we're aiming to give you that real signal through all the noise. By the end of this, you should have a much clearer picture of where Nebius Group fits into this whole rapidly evolving AI infrastructure landscape.
For sure. Yeah.
And speaking of the bigger picture, there's something pretty interesting about Nebius's strategy that we found, and we're going to get to that towards the end of our discussion. I think it might surprise you. It could even change how you think about the whole race for AI infrastructure dominance. So stick around. Okay, so let's just jump right in. First things first. What exactly is Nebius Group's main line of business?
Well, at its core, Nebius Group wants to be a top provider globally of that basic infrastructure that's needed for AI, for, developing and deploying it. Their main offering is something called the Nebius platform. Think of it as a specialized data center in the cloud, providing the heavy computing power, lots of those advanced GPUs, along with strong data storage solutions, and a whole suite of specialized tools and services designed just for AI developers.
Okay, so it's focused really just on AI rather than a broad range of general cloud services.
Exactly.
But it sounds like there's more to it than just this central platform, right?
Right. They've got a network of kind of complementary business units. So there's Toloka. They're focused on data services for generative AI, everything from creating training data to checking how well AI models perform. Then you've got 1010, which is an ed tech company. They're all about upskilling people for tech roles, basically building that talent pipeline. Everyday is their venture into autonomous driving technology, developing solutions for both self-driving cars and delivery robots. And the really important part of their business is AI Studio. It's a platform that's made to streamline how you fine-tune AI models at a large scale. They also offer what they call tailored AI solutions, which are customized AI applications for specific industries and tasks. This whole ecosystem they've created lets Nebius potentially capture value at all these different levels of the AI landscape.
Wow. That's quite a diverse set of activities. How does all this actually turn into revenue for Nebius? What's their main way of making money?
Okay, so their bread and butter is expected to be their cloud computing services, the use of their high-performance GPUs. Those are really important. And then, the data storage that goes along with that and access to the Nebius platform. Toloka probably makes money through fees for its data services. 1010 gets income from tuition fees for their tech reskilling programs. The revenue model there is still kind of taking shape, but it could be things like licensing their self-driving technology or maybe even selling autonomous systems in the future. AI Studio is probably on a subscription or usage-based fee model, and in general, they use both subscription and variable pricing for their different products.
So they've got a lot of irons in the fire. It's a smart way to diversify and capture revenue from different parts of this whole AI world, which is obviously growing really fast.
It is, yeah.
So we see how they're generating revenue, but what are some of the products and services they offer that are really making waves? What are their standout offerings?
All right, so their AI cloud is a big one. It's a scalable infrastructure. Underneath it all, you have NVIDIA GPUs, and they're using high-speed InfiniBand networking.
And for anyone who doesn't know, InfiniBand is a high-performance interconnect technology. It's all about speed and efficiency.
Exactly. And it's managed with tools like Kubernetes and Slurm. This whole setup is designed to be as efficient as possible for demanding AI tasks. Another core offering is their AI Studio. This is specifically for fine-tuning AI models at a large scale. It gives users access to leading AI models and the infrastructure they need, and the pricing is very transparent. It's worth noting that AI Studio was actually recognized by artificial analysis for being super cost efficient in this really important area of AI development. Then there are the tailored solutions we talked about, which cover everything from preparing data and training models to running them and building generative AI applications for specific industries. To make things even easier for developers, they offer managed services for tools like MLflow and Apache Spark, so they take care of all the operational stuff.
So they're trying to really take the headache out of the whole process.
Yeah, exactly. They want to make it smooth. They also have what they call ready-to-go solutions, which are pre-built integrations and tutorials that help users get up and running quickly. And they really emphasize their 24/7 expert support. They have solution architects on hand, especially for those complicated setups with multiple nodes. Basically, their whole approach is about making it easier for anyone to innovate in AI.
That's really interesting. So it sounds like they're trying to streamline the entire AI development life cycle
Yeah.
from start to finish. So where do they stand in the market right now? What's their scale, their reach?
Well, they're trying to be a major player in this AI infrastructure sector, which is, expanding incredibly quickly. While their headquarters is in Europe and they're listed on NASDAQ, they're definitely thinking globally. They've got a large research and development division, about 850 AI engineers, from what we hear, all focused on innovation. Their main operations are in Amsterdam, but they have these R&D hubs in Europe, North America, and Israel, so it's a global network of innovation. The heart of their Nebius platform is these huge GPU clusters made for the most intensive AI workloads. And they're making a big push into the US market with a new data center in New Jersey, which is supposed to have a capacity of up to 300 megawatts. That's massive. It's interesting, though, there's some discrepancy in how many employees they have. Some sources say around 1,300, others over 26,000. That's a big difference, and it would be good to have some clarification there. But their global presence and investment in R&D and their expansion in the U.S., it all points to a strong commitment to growth.
Yeah, no doubt about it. That planned U.S. data center with a capacity like that just screams growth. So when they're talking to potential customers, what's their pitch? What's their value proposition, the thing that sets them apart?
Basically, their message is, we're the ultimate cloud platform for AI innovators. They want to make advanced AI infrastructure available to everyone. They talk a lot about how scalable their platform is. You can go from using just one GPU to thousands, which means you can handle both the intensive training phase and the deployment phase of AI development. They're also very focused on performance optimization. Their platform is specifically built for AI workloads, using NVIDIA GPUs, high-speed InfiniBand networking, and those advanced tools for managing it all. Another thing they push is long-term value through efficiency. They're trying to be more cost-effective in the long run compared to those more general cloud providers.
So they're not just thinking about today, they're thinking about the future, about how to provide a sustainable advantage to their customers.
Exactly. And their AI Studio is presented as this really user-friendly but powerful platform for fine-tuning models. It's not just about the tech, though. They offer a ton of resources, including the latest hardware, managed services for key AI tools, ready-to-use solutions, and that 24/7 expert support we talked about. They're also building and running their own AI-optimized data centers, which are becoming more sustainable. And they say they offer competitive pricing on GPU resources. Their own R&D team actually uses the platform, which means they're getting real-world feedback to constantly make it better. Plus, being an NVIDIA reference platform cloud partner gives them a lot of credibility and access to the latest advancements. So they're really positioning themselves as this high-performance, cost-effective, and comprehensive cloud platform tailored specifically for the complex needs of artificial intelligence.
Okay, so to summarize, Nebius is all about building and running cloud infrastructure that's perfect for AI and machine learning tasks. Their revenue comes from subscriptions to their computing resources, data storage, and development tools. And they have all these other business units that support their overall position in the AI world. That's a really comprehensive overview. Now let's shift gears and talk about the people behind all of this. What can you tell us about the leadership at Nebius Group?
Well, the man in charge is Arkady Veloz. He's a pretty well-known name in the tech industry. He co-founded Yandex, which is often called the Google of Russia, and was the CEO for 25 years. That's a long time. And Yandex grew significantly under his leadership.
Yeah, 25 years, that's impressive.
It is. It shows that he knows how to build and scale a major tech company. And he's also founded other IT companies like Comtech International, so he's got a long history in the sector. It's important to mention, though, that he was hit with EU sanctions back in 2022, which led to him leaving Yandex. Those sanctions were lifted in 2024, but it's something investors might want to consider.
So a long and established career in tech, but also some, let's say, baggage from the past.
Yeah, that's fair to say.
What about their ability to handle tough situations? What's their track record like when it comes to crisis response?
Well, at Yandex, Veloz had to deal with all sorts of challenges, tough competition and changing regulations in Russia. But the biggest example of crisis response is probably the creation of Nebius Group itself. They decided to spin off the international operations of Yandex as Nebius Group. That was a direct response to the whole geopolitical situation with the Russia-Ukraine conflict and the sanctions that followed. Veloz also said publicly that he wanted to help Yandex employees who wanted to leave Russia after the conflict escalated. That shows he was thinking about his people during a very uncertain time. This move to separate the international assets and create Nebius Group seems like it was a proactive way to protect those operations in a changing world.
Yeah, that was a bold move. And speaking of change, how transparent has Nebius Group been in their communications, especially during this big transition?
Well, they seem to be making transparency a priority. They've got a whole investor relations section on their website where you can find financial results, annual reports, press releases, all that stuff.
So they're putting the information out there.
They are. Arkady Veloz has also done interviews talking about the company's strategy and his vision for the future. And because they're listed on NASDAQ, they have to follow the SEC's reporting rules, which are pretty strict. Veloz actually talked about how important clear communication was during the whole separation from Yandex. He wanted to reassure partners and investors about Nebius Group's new focus and direction.
So they're checking the boxes when it comes to transparency and communication.
Yeah, it seems so.
Which is important, especially for a young company with, a history that might raise some eyebrows.
Right.
Okay, let's move on to the numbers. Chapter 3, financial health. How are they doing financially? What do the key indicators tell us?
All right, so let's start with some basic metrics. As of late March 2025, their market cap was around $5.26 billion, although that can change with the market. Their price-to-earnings ratio, or PE ratio, is negative.
Which isn't necessarily a bad thing, right?
Not at all. It's actually pretty common for companies that are growing really fast and aren't profitable yet. Their earnings are negative, so you get a negative PE ratio. But their revenue growth is pretty amazing. In the fourth quarter of 2024, their revenue was up 466% compared to the year before.
That's huge.
Yeah. And for the whole year 2024, the year-over-year growth was 462%, which brought their total revenue to $117.5 million. They're aiming for an annual run rate revenue between $750 million and $1 billion by the end of 2025. That's a big jump. Now, profitability is a different story. As of December 31st, 2024, all their profit margins were negative. Gross margin was negative 68.07%, operating margin was negative 309.28%, and net margin was negative 360.42%.
So they're not making money yet, but they're growing really fast.
Exactly. And it's important to remember that any positive margins they might have had in the past probably reflect Yandex's overall operations before the spinoff. On the plus side, their debt-to-equity ratio is pretty low.
Which is good.
Yeah, it's around 0.01%, according to some reports, which means they're not relying too much on debt financing. They also seem to have more cash than debt on their balance sheet. But their free cash flow is negative, about negative 378 million rubles.
Rubles.
Yes. And they had an operating cash outflow of $319.6 million in fiscal year 2024. Finally, their price-to-book ratio has been up and down, but has generally been between 1.6 and 2.0.
Okay, so we're seeing this impressive growth in revenue, but they're still struggling with profitability. What does this tell us about their financial stability?
Well, their earnings have been volatile in the past, but we have to remember that Nebius is a new independent company after the spinoff.
So we can't really judge them based on what happened before.
Right. They don't have a history of paying dividends, and they haven't said anything about starting to pay them, which is normal for tech companies that are focused on growth. They usually reinvest their earnings back into the business.
Makes sense.
Their debt management seems to be good. They have low debt and lots of cash reserves, which gives them some flexibility. And they seem to be managing their working capital well, which means they're good at collecting payments from their customers.
Okay, so they're managing their money well, even though they're not profitable yet.
Yeah, it looks that way.
What about their return on invested capital, or ROIC?
Well, their ROIC is currently negative. It's been somewhere between -6% and a -12%, depending on the reporting period and the source. Basically, this means they're not yet generating returns that exceed their cost of capital. This isn't unusual for growth companies that are investing a lot in expansion, especially in industries like cloud infrastructure, which require a lot of capital, but it's definitely something that investors will be watching closely. Nebius will need to show that they can improve their ROIC as they get bigger and more efficient.
Okay, so the takeaway here is strong revenue growth, but negative profit margins and negative free cash flow. They have a healthy balance sheet with low debt, and they're managing their short-term finance as well. But that negative ROIC is something they need to work on. All right, before we get into the second half of our deep dive, where we'll talk about market sentiment, ownership structure, and risk assessment, let's take a quick break.
And when we come back, I want to tell you about a tool that can help you do this kind of in-depth analysis yourself. It's called stockanalytics.ai. And imagine being able to create detailed reports, podcasts, or videos about any stock, all tailored to your specific knowledge and how deep you want to go. That's what stockanalytics.ai is all about. And it's not just about static reports. They're also building an interactive interface where you can ask direct questions about a stock. They're working on a voice-controlled stock screener so you can find new opportunities, and a portfolio analyzer to help you manage your risk. If you want to see the future of financial intelligence, check out stockanalytics.ai. They have a demo on their site. And they've opened a waiting list for beta users with 50% discounts and even opportunities to invest in the platform. Sign up now at stockanalytics.ai. And we're back to our deep dive into Nebius Group. So the first half, we covered their business model, looked at their management team, and dug into their financials. Now let's move on to Chapter 4, Market Sentiment. How is the market feeling about this company and its stock?
Well, it's a bit mixed, and there's some volatility. We saw their stock price drop after they released their Q4 2024 results. Analysts and investors seem to agree that there's big potential in the AI infrastructure market in the long run. But there's also some concern about the stock's current valuation. Some people think it's trading at a premium compared to how they're performing financially right now.
So there's this tension between the excitement about AI
Yeah.
and the caution about their current financials.
Yeah, exactly. And of course, there's some investors who are really bullish on Nebius. They're driven by the hype and the expected growth in the AI sector. So you have this mix of optimism about the future and concern about the present, which creates some uncertainty and contributes to the volatility.
Okay, so it's a bit of a roller coaster ride.
Mm.
What are the analysts who covered the stock saying specifically? What kind of price targets are they setting, and how are they rating the stock?
Overall, the analysts seem pretty optimistic based on the reports we've seen. Their average price targets are between $55 and $56.20 per share, which would be a big jump from where the stock is trading now. Most of them are rating the stock as a buy or a strong buy, although one of them recently downgraded it to just a buy. It's important to remember, though, that not many analysts are covering Nebius Group yet, especially compared to more established companies. But the general feeling among those who are covering it is positive. They seem to think that Nebius will perform well in the future and that their current valuation is justified.
So cautious optimism, but still optimism. How have recent news and events affected how the market views Nebius?
Well, it's been a mixed bag. Good news, like their partnership with NVIDIA, which is a big player in the GPU market, and their plans to expand their data centers in the US, especially that big one in New Jersey, have been well received. Those are seen as signs that they're on the right track for growth. But when they released their Q4 2024 earnings report, which showed those net losses and cash outflows we talked about, the stock price took a hit. Some analysts gave them buy ratings after they went public, which helped initially. But then some concerns came up about their customer acquisition rate slowing down and the possibility of too many GPUs flooding the market in the future. That could affect Nebius's pricing power and their ability to compete. So the stock seems to be sensitive to both good news about growth and any perceived problems with how they're doing business or changes in the overall market.
Okay, so it's a dynamic situation.
Yeah.
They need to keep hitting those milestones and executing well to keep the market happy. Now, let's get a little bit into the weeds and talk about some more speculative stuff. What can we learn from the short interest in the stock and what's happening in the options market?
Okay, so there is data available on short interest, but how often it's reported depends on the source and regulations. When we look at the put-call ratio in the options market, which basically tells us how optimistic or pessimistic options traders are, we see some mixed signals. Some data suggests that traders are bullish, meaning they think the price will go up. But other data suggests they're bearish, meaning they think the price will go down. And when we look at unusual options activity, which means large or out-of-the-money trades, we see both bullish and bearish bets. And the strike prices for these trades are all over the place, from $10 to $70.
So some people are betting big that it'll go way up. Others are betting big that it'll go way down.
Yeah, it's all over the map. And that wide range of price targets, along with the mixed signals in the options market, tell us there's a lot of speculation going on about Nebius's future. It means the stock price could be pretty volatile in the near term.
Okay, so the market's view is a bit of a puzzle. It reflects both the huge potential in the AI infrastructure space and the inherent risks that come with a young, unprofitable company.
Definitely.
Let's move on to Chapter 5, Ownership Structure. Who are the big players who own chunks of Nebius Group?
All right, so Nebius Group has a significant level of institutional ownership. Different reports say that institutional investors hold somewhere between 46.5% and 57.6% of the company's shares.
So big institutions are already heavily invested.
They are, and it looks like more and more institutions are buying into the company. Some of the top holders are big names like Orbis Allen Gray, FMR LLC, which is Fidelity's parent company, Fred Alger Management, and Excel Leaders. When you see this kind of institutional investment, it often means that these sophisticated investors who have a lot of resources to do research see value in the company and believe in its long-term growth.
Makes sense. What about the insiders, like the management team and the founders? What's their stake in the company, and have they been buying or selling shares lately?
Well, the founder and CEO, Arkady Veloz, has a big stake in Nebius Group. Reports say he owns somewhere between 13.06% and 17.5% of the shares, either directly or indirectly. And there haven't been any reports of insiders buying or selling stock in the last 12 months. When the founder and CEO own a large chunk of the company, it's usually a good sign for investors. It means their interests are aligned with those of the shareholders, so they're more likely to make decisions that will benefit everyone in the long run.
Right, so Veloz is putting his money where his mouth is.
Yeah, you could say that.
What about ownership concentration? Are there just a few big players who control most of the shares?
Yes, there is some concentration of ownership. The top 25 shareholders own about 49.46% of the outstanding shares. This includes those big institutional investors we talked about, plus Veloz's stake. When ownership is concentrated like this, it can make the stock price more volatile because those major holders could buy or sell large blocks of shares and swing the price. But it also means those big shareholders have more influence on the company's strategy and governance.
So it's a double-edged sword.
Yeah, it is.
More influence, but also potentially more volatility. What about Nebius Group's corporate governance practices?
Well, they seem to be following the rules and best practices. Their board of directors has a lot of experience in building and scaling global tech businesses. And they make all their important governance documents public, like the charters for their board committees and their code of conduct. They also have all the usual committees, like the ones focused on governance, nominations, audits, compensation, and investment. These committees are important for overseeing how the company is managed and making sure everything is done ethically. So their commitment to good corporate governance practices usually makes investors feel more confident because it shows they're being transparent and accountable.
Okay, so they're ticking all the boxes when it comes to corporate governance.
Yeah, it seems like it.
Now, let's move on to a really important part of our analysis. Figuring out Nebius Group's strengths and weaknesses and the opportunities and threats they're facing. Chapter 6. Risk assessment through a SWOT analysis. Let's start with their strengths. What are they really good at?
Okay, so one of their big strengths is their team of AI engineers and researchers. They're really experienced, which is crucial in this field. They've also built their own AI infrastructure from the ground up, which gives them a lot of control and allows them to optimize things in a way that their competitors might struggle to copy.
So they're not just relying on off-the-shelf solutions.
No, they're doing it themselves. And they're focused on building energy-efficient data centers, which is good for their costs and for the environment. Plus, they've shown strong revenue growth recently, which means they're attracting customers, and they've secured a lot of funding, which gives them the resources to grow. Finally, their partnership with NVIDIA is a big plus. NVIDIA is a leader in AI computing hardware, so this partnership gives Nebius access to cutting-edge tech and important markets.
So they have a lot going for them, but every company has weaknesses. What are some areas where Nebius needs to improve?
Well, the most obvious weakness is that they're not profitable yet. They're losing money, and their free cash flow is negative, which means they're burning through cash to fuel their growth. They're also a relatively new company since the spinoff, so they don't have a long track record to prove that they can keep performing well. And their annual run rate revenue at the end of 2024 was lower than they had predicted, which raises some questions about how well they're executing their plans in the short term.
So they need to show that they can turn things around and start making money.
Yeah, for sure.
What about the external factors? What opportunities are out there that Nebius can take advantage of?
Well, they're operating in a market that's absolutely exploding. The demand for AI infrastructure is growing incredibly fast, and that trend is only going to continue.
So they're in the right place at the right time.
Exactly. And they're focused specifically on AI cloud services, which gives them an advantage over those general-purpose cloud providers. They have a real chance to grab a big piece of the market if they can keep meeting the needs of AI developers and businesses. And their expansion into the U.S. market is a huge opportunity. The U.S. is one of the biggest consumers of cloud services, so if they can make it there, they can make it anywhere.
So lots of potential for growth, but also lots of competition. What are the big threats that Nebius is facing?
Okay, so competition is fierce. They're going up against huge, established cloud companies with tons of resources, and there are also a lot of well-funded startups trying to get into the AI infrastructure game. And the technology is changing so fast. There's always a risk that someone will come up with something new and disruptive that will leave Nebius behind.
So they can't afford to stand still.
Not at all. And then there are the regulations. Governments around the world are starting to pay more attention to AI, data privacy, and data centers. That could mean new rules and costs that Nebius will have to deal with. And building and running cloud infrastructure is really expensive. They need to keep investing a lot of money in hardware and facilities just to stay in the game. Plus, energy costs could go up, which would hurt their profitability even though they're focusing on efficiency. And finally, even though they've separated from Yandex, there might still be some geopolitical risks hanging over them from that past connection.
So it's a high-stakes game with a lot of moving parts.
Yeah, definitely.
Okay, so we've laid out the strengths, weaknesses, opportunities, and threats.
Yeah.
Now for our final chapter, Chapter 7. Brief conclusion and that end hook reveal. What's your overall assessment of Nebius Group after all of this?
Well, it's a fascinating company. They have a lot of potential, but it's a complicated picture. They have strong technology and impressive revenue growth, which shows there's demand for what they offer. But they're not profitable yet, and there's a lot of competition out there. For investors who are focused on value, Nebius is probably a speculative growth stock right now. It might be best to wait and see if they can start making money consistently before jumping in. It's going to be important to watch how they do in terms of reaching their revenue targets for 2025 and improving their profitability and cash flow.
So hold off for now, but keep a close eye on them.
Yeah, that's my take.
And now for that interesting strategic element we mentioned earlier. The thing that might change your perspective on the whole AI infrastructure race.
All right, so remember how we talked about Nebius focusing on designing and even manufacturing their own data centers with a big emphasis on energy efficiency? Well, if you think about how much energy AI infrastructure uses and how governments are starting to crack down on that, it could be a huge advantage for Nebius. They've been thinking about energy efficiency from the beginning, which could make a big difference in the future. As regulations get tougher and energy costs keep going up, their competitors who haven't been as focused on efficiency might find themselves in a tough spot. So Nebius's focus on efficiency could really shake things up. It might not be all about who has the most computing power. It might also be about who can provide that power in the most efficient and sustainable way.
That's a great point. It adds a whole new dimension to the competition. So to recap, the AI infrastructure market is huge and growing fast. Nebius has developed innovative technology, and they have an experienced team. But they're still losing money, and they're facing a lot of competition.
Yeah. And what's your take on this? Considering how much attention people are paying to the environmental impact of AI, how important do you think Nebius's focus on energy efficiency will be in the long run? And what other factors might we be overlooking that could determine who wins this whole AI infrastructure race?
Those are great questions, and I think the answers will become clearer as this market evolves. If you enjoyed this deep dive and want to stay informed about the world of technology and investment, be sure to subscribe to The Deep Dive. And don't forget to check out the Stock Analytics AI YouTube channel for more insights and analysis.
And remember, this deep dive is based on public information and should not be considered financial advice. Keep in mind that some of the analysis we talked about was generated by AI, so take that into account as well.